Hey everyone, welcome to another video by Stocktrades. My name is Matt, and today we are going to be looking once again at Canadian Dividend All-Stars, or aristocrats that are expected to raise dividends this coming week. As a reminder, please let us know in the comments below, are you liking our series? And please like our video and subscribe to our channel to make sure that you're not missing out on any great Canadian content. And with that, we're going to get right into it and talk about our trio of companies that are expected to raise dividends this coming week. There are three Canadian Dividend All-Stars, aristocrats, that are expected to raise dividends this coming week, but it's worth noting that these are the only All-Stars that we are expecting to raise dividends for the month of March. So we're pretty much done our series, our weekly series, if you will. We'll be doing other videos, obviously, on Sundays. It just won't be focused on Canadian Dividend All-Stars or aristocrats that are scheduled to raise dividends. So with that in mind, let's get into the first one, which is Stella Jones. Stella Jones, which is a producer of pressure-treated lumber, is actually one of the most reliable Canadian Dividend All-Stars. The company typically raises the dividend along with fourth quarter and year-end results, which typically happens at some point in mid-March. While it has a very strong history of dividend growth, the company's dividend growth rate has been all over the map. Case in point, in 2019, Stella Jones raised the dividends by almost 17%, but last year, that raise came in at only 2%. Granted, that raise came near the start of the pandemic, so perhaps the company was being a little cautious in their approach. What will 2020 bring? Well, the good news is that Stella Jones has a very respectable payout ratios. The dividend accounts for only 19% of earnings and 23% of cash flows. Given this, the company has ample room to extend their dividend growth streak to 17 years. Now that companies such as Stella Jones have more of a handle on how the pandemic will impact operations, we expect that those who perhaps raised by lower than expected last year's or who kept the dividend steady might perhaps increase the dividend if they are comfortable with how they are operating during the pandemic. We expect Stella Jones to be one of them, and we expect the raise to come in and around mid to high single digits. Next up on our list, we are going to be looking at Premium Brand Holdings under the ticker PBH on the TSX. A specialty foods distributor company, Premium Brands Holdings expected to raise the dividend along with the fourth quarter and year-end results this coming Thursday. Since the company's 8-year streak began, the company has consistently raised the dividends in March. Over the past 3, 5, and 1-year periods, Premium Brands has averaged approximately 10 to 11% dividend growth. Worth noting that the company also raised dividends by 10% last year at this time, which, as mentioned previously, was at the beginning of the pandemic. So will this year's raise be as high? It's going to be a tough call. At this time last year, the company's payout ratio was 86%, but that has since ballooned to 108%. As the pandemic has impacted profitability. There is, however, some good news. The payout ratio against cash flows is only 60%, and earnings per share is expected to rebound in a big way next year. Given this, the payout ratio against forward earnings drops from 108% to 55%. Over the course of the company's 8-year streak, Premium Brands has always raised by double digits, and investors, I'm sure, have been extremely happy with the rate at which Premium Brands has been raising the dividend. This year, I'm not expecting double digits. I'm expecting somewhere in the high single digits, and that's okay. I'm pretty sure shareholders will be just as happy given our current environment. The last company on our list is one that we're actually not quite sure if they're going to raise dividends, or perhaps they will have raised already by the time this video is shooting, and that is Enghouse Systems. So why do I say that I'm not sure that the company will have already raised dividends? Because at the time of filming, Enghouse has yet to announce when it was going to release its quarterly results. But what it did announce was its annual general meeting, which is expected to take place on Thursday, March 11th. So we expect the quarterly results come in before that AGM, perhaps this coming week, or perhaps it did happen just this past week. Regardless, we're still going to talk about it because it is one of the few tech aristocrats and all-stars on the TSX index. In fact, there are only 4, and at 14 years long, Enghouse has the longest dividend growth streak in the tech sector. Much like Premium Brands Holding, Enghouse's dividend growth rate is actually all over the map. The only consistency has been double-digit raises. Last year, the company raised the dividend by approximately 23%, which was above historical averages. Once again, during the midst of the pandemic. There's also another point worth noting. As you can see in the chart in front of you, there is a spike, a pretty significant spike. Well, that references a special dividend that Enghouse paid in the amount of $1.50 per share that it paid last month. The company is in excellent financial position, and with no debt, it had a big cash balance at the end of Q4. So it decided to return that cash to shareholders via a special dividend. You might be wondering, will this stunt growth? After all, Enghouse is really not only a dividend company, but it is also a high growth company. Not really. According to the company, it will have the necessary funding available for its acquisition activities. So given the company's strong cash position at the end of Q4, its continued performance, we expect the company to come through with another double-digit dividend raise, likely in the range of around 20%, similar to last year's raise. And that's it for our video today. We've only got 3 all-stars aristocrats that are expected to raise dividends. One, Stella Jones, which is actually well positioned to continue performing in light of our current environment. There is a considerable spending amount on infrastructure. The cost of lumber is going up. Stella Jones is actually well positioned to continue performing quite well. So we expect the company to come through with a dividend raise this coming week. Next, we have Premium Brand Holdings, which was growing at a pretty rapid pace pre-COVID. Now that has since slowed, but we believe once again that Premium Brands has many levers to grow the business. So we expect a raise, perhaps not as high as historical averages, but investors should expect something this coming week. And finally, we have Enghouse, which we like very much at Stocktrades. It's one of the top tech companies in Canada, and there's no question that the company is going to come through with a dividend raise. It's just a question of by how much. Definitely by double digits. The company's yield is probably not all that attractive to most dividend investors. However, if you're looking for a blend of dividend growth, Enghouse is one of the best on the TSX. Once again, this will be our last video on this series for the month, given that there are no more Canadian Dividend All-Stars that are expected to raise dividends in March. Not to worry, we are going to continue producing videos on our regular schedule, so please make sure you like the video and subscribe to our channel. You don't want to miss out on any more great Canadian content. Until next time.